guys, welcome back. AAGS.online. Thank you for joining me. I hope you have had some success, some luck with our last couple of picks. Maybe you've checked out the website, have one or two more kind of quote unquote secret picks I only put on there. Today we are going to be changing it up a little bit. So I know we usually give you a pick on what I think is going to do well or why, or give you a seasonal kind of pick as to, maybe this is going to be really hot this month or something like that. Today we're going to kind of look at the negative side and how we can profit at that. So sit back, relax, grab some coffee, energy drink, narcotics, whatever you do to get yourself ready to make some money. So, like I said, we're going to focus on the negatives today. If you're looking at the screen right now, in front of us is a lot of different theories as far as what days are better than others to be in the market, specifically the DOW. And if you've seen my videos before, you know why I like to focus on the DOW, but for the newcomers, I just want to reiterate the DOW is made up of essentially the 30, let's say, biggest is quote unquote companies in the United States. Companies like Apple, Amazon, Home Depot, McDonald's, things like that. And the reason that I like to focus on the Dow so much is because it is not as easy to manipulate as some other stocks, like a GameStop, like a Nokia, AMC, things like that. Anything that has a really small buy-in point, it's fine. I love them. You can make a lot of money with that. The problem is when you're trying to take advantage of those things, you have to be aware that a lot of other people are able to not just buy into that position, but they are able to buy in and sell out enough as far as volume is concerned to cause some price manipulation to maybe throw off your algorithms or your numbers, your expectations. So we want to kind of avoid that variable if possible. Companies like Amazon and Apple, the price that their stock is at, it's not that you can't buy it as an individual. It's more that you cannot buy enough. You can't get the volume, at over $1,000 a share. At least your common individual can't, to cause that sort of price manipulation. And even if you were to find out, hey, something's being really highly shorted here, or there's some sort of game we can play to make this, really work in our favor. Let's say you have 10 friends together, somewhat like GameStop. The odds are that you and your friends together still don't have enough money to buy, thousands of shares of Amazon and Apple. Because if you did, you probably wouldn't be trying to play the stock market with it. Um, but anyways, I digress. So all of these different measures are theories as far as what day you want to be in the market, and again, specifically the Dow. A lot of this stuff is going to be specific days, and some of it has very clear cut. This is why it's a good day. Like there's money coming in from IRA accounts, 401k accounts. There's maybe some sort of volatility that is going to be settled, like election years, election cycles, kind of giving the market a concrete floor to work on. And a lot of those things make sense. Even like November to May, you get that holiday time period, and then you get the new year. Which is when a lot of companies put out these great, fantastic expectations, kind of driving the price up. So a lot of these really make sense intuitively, and you don't need me to go over too much of it. One thing that does stand out, though, September specifically, is the only month of the year, and really the only time of the year, that does not start off from a neutral standpoint. Most months, like right now I'm recording this, we're in March. Not to say it's any better or worse, but March starts off neutral. As an investor, I'm not coming into March thinking it's going to be really great or really bad. September, throughout just historical records, September has been really difficult as far as trying to make money by holding a position through September. And if you are a buy and hold person, I'm going to buy it when I'm 30 and I'm going to sell it when I retire. You would honestly do better to take your money out the month of September every single year and then put it back in October. Not that it's always going to be down, but you just kind of take that volatility away. And September, in the best of years, is neutral, so you're not really losing anything. But let me get a little bit more specific with what I mean on that. And so September, going back to 1900, so at this point we're at about 121 years, or 120 because we haven't had September this year, worth of history. So it's not something you can sneeze at, whether you believe in seasonal trends or not. Something this consistent is not a fluke. We have over a century worth of data here. So 58% of the time, September ends up being a negative month for the Dow. So 58% of the time at 120 years or 120 sample, that's pretty significant. You're really running and that's the 42% of the time it doesn't end up negative. Doesn't mean it's positive. Uh, the overwhelming 42% is just neutral, or if it is a gain, it's a very minimal, like 1 to 2% gain. Again, kind of going back to what I was saying, for the most part, you'd be better off just taking your money out in the month of September, even if it's in your 401k or IRA. Tell them to liquidate, keep that in cash for the 1 month, and put it back in October. Over the long run, that's actually going to make you money. But let's keep moving forward with getting kind of specifics here. So your average daily gain, so even drill it down further, in September is a negative. It's a negative 0.0004%. It doesn't sound like a lot. Really isn't a lot, especially if you don't have a huge amount of money in the market. But it's a negative. And those add up because that's daily. So you're going to compound that daily as long as you have your money in the market throughout September. Comparatively, the rest of the days throughout the year, the rest of the trading days of the year, your average daily gain is 0.0003. So not only is it a positive, but it's 0.0003. It's not just like it's just barely positive. It's got a little bit more than you would think, especially when you stop to compound that or to annualize that. So just to give you a more broad sight of this, if you were to annualize those two rates, your annual gain for the rest of the days, the rest of the year would be about 8%. So 8% can be what the market does, and depending on what we're looking at here, but an 8% gain annually is not mind blowing. It's not something that's unbelievable. It's actually very feasible, and that's what we look at the rest of the year. For September specifically, again, 120 years worth of data here. September's days compounded would give us an annualized return of negative 11.7%. Now that's hard to do, especially in a year where the market is doing good, or even if it's just a neutral year. A negative 11%, you gotta be doing something wrong there, or you're taking unnecessary risk. September is just not a good month historically, so I've given you the month. I've kind of shown you what the daily gains look like, and even what the returns look like if you annualize them. So you're taking that small sample size and just spreading it throughout the year. So what day specifically is bad in September? When should you get out of the market, and what should you do to kind of maybe counterbalance this? Do you want to totally get out of it? What should we do from here? Well, now that we know a little bit more data, I am going to be purchasing SDOW, which is an ETF, but it essentially is an inverse ETF of the Dow. Inverse, if you're not familiar with it, just means it's going to do the opposite of whatever the Dow does. So if the Dow were to go up, I would lose money. If the Dow goes down like I'm expecting, it's going to make money. But not just SDOW throughout the entire month. I drilled it down even further than that. As we've seen before and in previous videos I've talked about it, the beginning of the month and the very end of the month are usually positive, regardless of what month you're talking about. And again, that does go back into the, just money flowing into the market. So it kind of buoys everything. We have everybody, that gets paid at the end of the month ends up having all their money going to their 401ks and IRAs. People that are contractors or entrepreneurs, they're taking their end of month money and putting it into retirement accounts or investment accounts. And so you have a lot of money flowing in at both the beginning and the very end of the month, and that kind of pops up prices. So I don't really want to be going against the Dow at that time. So September 7th is the day that we kind of see that trickle off. We're not getting a lot of new money coming in to buoy the prices up. From the 7th through the 13th is when I want to be in the SDOW specifically. I want to be in the SDOW because I believe that's going to be the week that there's nothing, absolutely nothing, none of the rules that I was talking about earlier, none of the holiday events, the election events, nothing like that. There's absolutely nothing at all helping the Dow throughout that short little week of a time period. It's the only time of the year that has a -1 as a score. So just again to keep in mind, my scoring bracket goes from a -1 to a 5 on the algorithm that we've kind of plugged in here. It is the only time of the year that has a -1, or the first time of the year, I should say. After that, we do have a little bit of a pop in the middle of the month, and again, that's going back to the exact same theory here as far as just money flowing into the account. Usually you have people who get paid bi-weekly, you have some new money coming in, people investing, things like that. Towards the middle of the month, it's not as reliable, but it does have a trend to we see a slight pop in the middle of the month with some extra money, and just kind of in general the market does a little bit better for a handful of days, about 3 or 4 days. So I want to pull my money out on the 13th and then put it back into SDAO on the 17th. And this will be the 17th through the 23rd. And that way we are kind of avoiding the end of the month where we are expecting to see some more money come in. So we're only going to have about another week or so from September 17th through the 23rd, where again we have absolutely zero data, zero trend, zero support for the DOW. Now, obviously, something can happen. Big news comes up, some sort of stimulus package. The government does something to kind of inspire some spending. All those things can happen, so it's not completely a fail-proof plan here. But again, I'm looking at over 100 years of data, and I'm telling you that with 100 years of information and data and trends, and well, over 10 years of just being in the market experience, working in the finance industry, reading dozens and dozens of books on seasonals and timings and things like that, this is the very brief 2 weeks out of this year that are going to have a negative score. Um, Next year, I don't even believe that this is going to be around again, because if I'm not mistaken, I believe there's an election period that's going to kind of be in and around this time next year. So next year we should have at least a zero score. So take advantage of this. If you want to just play it safe and just take your money out of the market throughout these 2 weeks, by all means, that's perfectly fine. If you're a little bit more aggressive like I am, or maybe you feel a little bit more in tune with the market, play it to your advantage. Buy the SDAO, or you can short the DAO if you really want to. I'm going to just buy SDAO and be a little bit more conservative. But by doing this, you'll be taking advantage of what we expect to be a really slow period. I'm not saying it's a crash or anything like that. It's just going to be a temporary dip that, as of right now, seems pretty expected. So hopefully this was helpful. If you do have any questions, any concerns, anything maybe you'd like me to go over as far as seasonal time periods, something that maybe you have an opinion on or a theory on that you'd like to discuss more, I'd be happy to go over that. Just put it in the comments below. I'll try and get back to everybody that I possibly can. I do appreciate the support. If you can, please like and subscribe. Again, I will be coming out with another video. I'm trying to get at least one, possibly two a week. I don't want to just be putting nonsense information out there and trying to reach for things, because that's when we're going to make a mistake. But as I see these opportunities coming, especially if I can spot them a few months away, to give you some time to kind of prepare and move your portfolio around to take advantage of these things. I like to do that. I want to make sure everybody's making money, and my belief in this. And I've had people ask me, how come you don't try to monetize this more, or you're not trying to, make something more of it? Honestly, my theory is that if I can help everybody make some money, if we can all kind of do this together, we're going to collectively be in a better place. I don't want to charge for that. I'm not doing anything I wouldn't be doing otherwise. So if you have any questions, any concerns, again, put the comments below, or reach out to me on Twitter, and I'll put my Twitter handle in the description. Thank you again for taking the time, and have a great day.